welcome on board now Nishit Shah, MD and Group CFO at JM Financial, to talk about how their quarterly performance has been. Nishit, great to have you on ET now. You've clearly mentioned earlier that your wealth management segment is in an investment phase. Tell me, by when should investors expect this to translate into visible margin and PAT improvement?
So that's a great question. Just to give you background, we've almost doubled our relationship managers as far as wealth is concerned, as also our sales employees have increased to almost 835 now. So there has been a lot of investment both in physical infrastructure, digital infrastructure, as well as talent that has been recruited. Our sense is that FY27 and FY28 will be the years to watch out for, because a lot of costs have gone into the P&L, and the benefits of operating leverage should come in the next couple of years. That is our expectation.
You know, private markets, the performance has improved very sharply. In fact, perhaps that's the one reason that the secondary market has been doing what it has. Tell me, what were the key levers that actually drove this, and whether you see 2026 also to play out pretty much the same?
Correct. So in terms of levers for the private markets, as you would be aware, we have pivoted to a strategy where we want to syndicate a lot of the credit. And this quarter, as in the December quarter, we did a large syndication transaction of 3,300 crore. So that strategy is playing out well. And if you look at the private markets, it's really a sort of a natural hedge compared to volatility in the capital markets. So these earnings should stack up when there is volatility in the capital markets, as we saw in the December quarter. The other lever is the recovery bit. So earlier we had guided around 250 to 300 crores of recovery in each of 26, 27 and 28. We are already at approximately 260 crores for the first 9 months. So that is also a lever there. And the other part will be the loan book, which we have sort of consciously reduced up until this point of time, should start picking up. So you could easily see a 15-20% growth on the loan book from these levels. So I think all of these strategic initiatives are kind of getting executed well, and we should start seeing the results. I guess one other point that I would like to make is also, if you look at our performance over the last 6 quarters, right? The average profit for the quarters has been in the region of around 275 crores on an average basis. So there is a lot of consistency coming in terms of the earnings, and also the scale benefits are coming into the earnings. So that shift of the trajectory you are seeing in terms of the earnings.
Let me take a cue from that, Nishit. So this 1,000 crore, maybe 1,100 crore kind of clip in terms of profitability, annualized, of course. You expect that to be the base now, and you'll only grow from here? Is that the way one looks at it?
Yes, I think that would be a way to look at it. Obviously, there is some dependency in terms of the capital markets performing, but we are looking at it from a longer term perspective. The investments will continue, and that is how we are looking at the business. You are absolutely right.
Okay, and your RMs, you did mention that they've doubled now. So from 110 to 222, to be precise, basis your presentation. Does it flatten now, or do you continue to grow your RM? So I'm trying to understand how the OPEX plays out going forward, or is it now just a revenue lever for you?
Correct. So I think you would see one more quarter where we will continue to hire. Say ballpark between March and June, the hiring will continue. Hopefully then we'll pause, and we should look at we'll sort of monitor the productivity as far as the RMs is concerned. So the base is set now, and there will be some increase in the OPEX, and then it will be more in terms of operating leverage and productivity.
Where do you go in terms of RMs from 222? Is 250 the number that you're targeting?
Yeah, ballpark, that will be the number.
Okay, and how does AUM per RM go if this were to happen? Because you've obviously front-loaded the hiring process. Will it be hockey stick in terms of AUM per RM? Will it just go through the roof?
Yeah, so if you look at, we've already started seeing the fruits of the investments. If you look at the recurring AUM, that has gone up by 33% on a year-on-year basis. So we should expect decent growth out over there. Also, what should help is some of our asset management products in terms of the alternative products that have also received approvals, etc. So you would see a launch of those products also going forward, which will obviously help the wealth business.
Okay. And with regard to, therefore, your recurring AUM, it's at 33,000. It's a growth of around 33% to be absolutely precise. Talk to us about the kind of growth that one can expect over the next 12 months, very likely on this. Because this will, therefore, at least from May onwards, May of this year onwards, play out completely on the bottom line, excluding the 25% tax impact that you will bear. Is that the right way to look at it? And what's the kind of growth clip you're targeting?
So we are looking at a growth clip anywhere between 25 to 30% going forward. And yeah, that is the recurring AUM growth that we are looking at.
But Nishit, apologies if I'm getting this wrong. You're talking about 25 to 30% of fresh money coming in, right? Not on the AUM number. Your
No,
AUM will
I meant
grow.
AUM, the AUM growth.
Oh, okay.
Yeah.
Oh, okay. I get your point. All right. And with regard to scale on branches, at 73, are you well levered in that sense with regard to wealth?
No, we will continue to invest further in the branches as well. So as you know, we've added about 11 odd branches in the last 1 year or so. We will continue to expand the branch network as well.
And with regard to fee versus your home loan book, what's going to be the contribution to top line? Will it largely be the same? Will it shrink from here on a steady state basis? Will it go up? How does it work?
You're talking about the home loans business?
That's correct. That's correct. Yes.
So home loans, you would continue to see a growth in the AUM. There also, we've been guiding 25 to 30% growth in the assets under management. Again, within that, there is a mix of direct assignment as well as on-book loan growth. But we are very hopeful of achieving that sort of a growth rate, and the interest income and will move on that basis itself.
Nishit, it's been wonderful speaking, and frankly, there's so many things to unpack with regard to JM Financial. Very difficult to do it on a 10-minute conversation, and we have the policy as well. So we're going to have to go to that. But I'd love to have a larger conversation with you with regard to the numbers. But thank you so much for coming in.
Yeah, absolutely, anytime. Thank you for having me on your show.
Wonderful. Thank you so much, Nishit. This has been a pleasure.
Thank you.
Okay.